you guys doing? You guys tired? Oh, I love that. Everybody's still here. No one's about to fall asleep 2 days in. And the first day was definitely long, but really appreciate you guys powering through. We are really going to talk about a cool topic here. I'm sure you guys have all heard about the term about real world assets, but to really dig into that, understand some of the history, where we've come from, I'm here to talk with Jen specifically. Love to maybe just kick it off specifically with some intros on my side. Mir, product marketing for the foundation on Suite. But also, Jen, I'd love to hear a little about your background and just kind of the story of, what's your crypto journey?
Thank you, Amir. Great to be here. I'm so impressed that this is towards the end of the conference. Everybody's still so engaged. As a board member of Sui Foundation, I think it's very important for me to see the level of passion and enthusiasm to Sui. So thank you. I have been investing tech, AI, deep tech, energy transition. But personally, I love crypto. I'm an applied math major. I got into Bitcoin probably when the price was $100 and caught my attention. And I read the paper and, of course, immediately made sense. So I took a huge risk and I bought some Bitcoin at $100. And when you went to 3,000, I thought, oh my God, I made so much money and I sold it all. But over the years, I love this journey and went through, this is my third full cycle. In 2016, actually yesterday with Meltem, if you watch her keynote, she and I go way back. 2016, we were selected by WEF as two of the 16 people in the Future Blockchain Council at that time, and there were a lot of ICOs. Joe Lubin, at Consensus at the time, tried to come to WEF to promote those ICOs. The difference then was that a lot of those earlier crypto bros, they created it just completely from tech point of view and make no sense to the real world. So for people in the real world, there's no real application that's relevant to them. But this time around, I actually think it's quite different. So perhaps we can unpack a little bit more why it's different this time.
Totally. Now, real world assets as a term, it's been thrown around a lot. You guys probably have heard it at the conference before. You probably heard it at other conferences. So, let's take that term specifically and let's just start with some of the history here. So, when we hear the term real world assets, what does that actually mean? And what is the problem it's actually trying to solve here?
Yes, a little bit history. So I live in Hong Kong. In 1970s, HSBC as the anchor institution in Hong Kong, they did one thing that was very transformative. So they basically, on the back end of the bank, they replaced all the paper trail with electronic. So to me, I think this time around, to completely digitalize real assets, it's fundamentally the same kind of transformation. Real assets, of course, all of us in the room, we will argue that Bitcoin is also real assets. But what I'm talking here, just for the convenience of discussion, it's really talking about the bond, community, stock, fund, real estate, those part of the assets that have not seen a lot of Web3 capability yet. So we are really talking about the type of assets that you will have access to in the traditional financial institutions. And typically, they're very regulated as well.
No, that's great to hear. So traditional financial services specifically, because I've heard it on like a wide spectrum. It could extend to a lot of different assets, but really just redefining, better understanding exactly what are we getting into to avoid really digging into this as a buzzword, but actually something that's tangible.
Yes.
So, as we look at like real world assets, and now that we have a better understanding of the term, I am curious in the audience here, are there any first cyclers here? Anyone that's coming into crypto with this being their first general cycle? With a lot of experienced people. Second cycle? Okay. Third cycle? Oh, wow. Anything longer than that? Are there more than three? My guy, there you go. So we have like a nice balance of experience, but it seems like everyone's gone through at least one cycle, if not more. So we take RWAs, and they have been around for a while. So I'd love to kind of hearing from you specifically, this versus a previous cycle, what's different specifically? Why does it make sense now? And is there anything that we can take away from the past to, really go into this more effectively?
Yeah, I think this time around, the most obvious part is the institutional preparedness. We are seeing. I mostly deal with the large families and traditional financial institutions, and we often joke that Bitcoin is the biggest FOMO trade in the world. When Bitcoin was done, everybody was this is a scam, but when it's up, they all want to know how to access. So finally, now there's ETF, and a lot of hedge funds have started to have a specific allocation to digital assets as well. So those traditional financial institutions now they are prepared. In fact, I think it's not only just prepared; they're all kind of gearing up to be not only just embracing as a part, but as a fundamental. Goldman Sachs, I work with their digital asset team 2 years ago, maybe 2.5 years ago, two persons in Asia. Now their digital asset team is about 200 people. So that's how much they are investing in this space. With the BlackRock, of course, you have heard. I think Larry Fink, if SEC and SFC allow them, he probably will tokenize everything. So I think this kind of institutional preparedness is the biggest difference. Secondly, I also think every cycle actually makes sense. In the first cycle, although we wanted to be relevant to the real world, but the underlying infrastructure was just not ready because the real world transaction requires much, much a higher throughput. You guys are developers and founders. I don't need to repeat to you in terms of the throughput, what Straight Group provide. But I think right now, in terms of the technical preparedness on the Web3 side, is also ready. So the difference is not only just for the two sides kind of meet and start to collaborate, but also understand some more nuance how to collaborate as well.
I'd love to dig into that a little bit more on this idea of readiness, because from previous cycles, from those that were either around or those that weren't, the ICO boom was really something that comes to mind. I'd love to maybe just learn a little bit more on your opinions of, what could we learn from that? Like, what was it collectively? What happened? And like, how does this differ in terms of the readiness angle?
So I'm sure everybody has your own stories. 2016, 17 with all the ICOs. Some of the ICO bros pitched me for ICO those years. Now pitching me for Gen AI startups. So shifted a little bit. But back then, most of those projects they are really just focused on the technical side, with very little appreciation of how the economy work, how accounting work, how regulation work, how compliance work. So I think this time around, the sophistication from institutional side to understand Web3 and then sophistication from Web3 side appreciate how to meet those requirements in real world, both have improved a lot. So I think perhaps I can show some numbers. I prepare some slides. So in terms of, this is a very conservative estimation by 2030. Roughly about $68 trillion worth of real assets will be tokenized. And whoever prepared this, I think this was from Boston Consulting Group, they have not met anybody attended to Basecamp. So there are bound to be some people in the crowd working on real assets as well. But more importantly, let's take a look at the overall universe, right? I think we come here often compare, this layer one to that layer one. To me, I think that's really a distraction. The total crypto space is about 2.5 trillion, but if you just take a look at equities, 109 trillion, bond 100 trillion, commodities 131 trillion, real estate 600 trillion. So if we could just put 1% of that on chain, all of us, in terms of how big the crypto market gonna be, how big is the token price, none of that gonna be relevant, right? Coming back to one point that Evan was making in his opening speech was introducing this new way of connecting and interaction between human and software. So I think this is one of the most fundamental applications in our society, which is finance, right? So if 1% of that we can capture, that's already bigger than all of us can digest.
Boston Consulting Group, if you're listening, you might have made a mistake. You clearly underrepresented the market here. So, well, okay. So crypto naturally with the ICO booms, like it had maybe the immaturities. There was definitely opportunities for improvement. Let's like almost overstep. So let's say we're going to take the complete other side and be more mature and almost proactive in how we think about things. So when we think about potential risks that still exist, when we think about things where we can still improve on and proactively start to identify and maybe protect against, what are some of those things that you think still exist and things that we can address now?
Yeah, really great question. I have seen a lot of tokenization companies. Tokenization is super easy. The front end, anybody can tokenize. And even including a lot of tokenization projects we have seen in large financial institutions, most of them are on private chain. And they're not fully automated. The reason why is because a lot of people get distracted by the front end of tokenization. So the front end of tokenization, what I mean is you actually just tokenize those assets, but those assets will be traded, transact, and exist in the very regulated environment. So in the regulated environment, anybody spend some time in banks and funds, you will know that there's so many steps and so complicated, and everybody have to be so careful on the back end to make sure all the signatures, all the approval, all the action, reaction, inaction are really compliant with the what regulators require. So with this, the front end is not really enough, right? If we truly want to put this on chain, on public chain, and automate the whole process, the back end is actually where the real challenge is. So to translate these human steps with action, reaction, inaction into logic actually requires very advanced math. So I invest in one of my portfolio companies in Hong Kong called ABT. The founder is 5 times math champion, and he worked with 6 math PhDs, basically figure out how to translate this kind of human process into logic. Once you translate that into logic, then you can translate that into smart contract. You can write that into smart contract, so you can be airtight. So they ended up tokenized gold for Hong Kong's most conservative group called Hong Kong's Gold and Silver Exchange. So the gold becomes one-on-one redeemable. It's a real liability. Each token is a real liability for the gold exchange because they can actually exchange gold bars, and they did it. So I think those are the steps actually have to be taken with such thoughtfulness and sophistication. And even with a lot of institutions, so HSBC in Hong Kong recently they announced the tokenized gold, but is it really tokenized? They probably just fractionalized in the more sophisticated ledger on the private chain, but there's no interbank trading, there's no automation, right? So I think to crack the back end is where the real opportunity is.
Yeah, it almost kind of sounds like a private chain is a little bit of a shortcut in a way where
Yes.
people had taken all the work in the past of integrating to cloud-oriented systems, and it was just what's that next incremental step? But it's almost inevitable now.
Yes, I would say the private chain stuff is still useful because this institutional preparedness is very important, right? For them to get to that comfort is very important step. But I think this journey has just begun. Probably hasn't really begun yet, because very
Totally.
few institutions really put on public chain. We recently tokenized $100 million US green bond with a Chinese bank. We put on public chain, and vast majority of people still can't tell the difference. Why it's more important to put on public chain, so you're truly decentralized instead of putting on the permissioned private chain.
Yeah. So it actually seems like one of the underrated risks here is also education too.
Yes.
On the idea of really understanding the differences. What are the value props here? A lot of the storytelling. Crypto's so tech oriented a lot of the time. So it honestly kind of forgets some of the educational side that's just as important.
Yeah, I think so. And it goes both ways, right? Because right now, I actually think to me, I see. I'm not a gamer, so I think gaming side is also very big opportunity. But to me, where I can see the areas that I understand, the 2 biggest real world opportunities on chain. One is individual data ownership in the AI economy to provide this individual data sovereignty. Number 2 is the real world assets. So for a lot of those institutions right now, they all want to tokenize. But if you talk to average bankers or even some individuals in the banks holding the position as chief innovation officer, they often cannot tell the nuances. They don't understand the nuance between front end, back end, how you can truly put something on smart contract. So I think discussions like this need to happen a lot more, so we can actually put this massive real world asset, at least a part of it in the next 10 years, to on a truly decentralized manner.
So you mentioned sustainability finance specifically as an example of work you've done in the past with Chinese banks. Different types of use cases exist. We see on the screen there's equities, bonds, commodities. Like, is there one specifically that stands out, maybe short term first and then long term, as real opportunities when we look at this projection of RWA? How do we achieve it? How do we even exceed it potentially?
So I think, why would you tokenize those assets, right? Why would you want to automate? Of course, one is efficiency, transparency, but also in terms of liquidity. So for a lot of those asset classes that typically don't have a lot of liquidity or don't typically be able to, facilitate smaller investors, or investor come different shape and sizes, you want to tokenize them. So for example, bond is a really a very good example. I love commodity as well. I think, gold, oil, especially if you go to, imagine if Saudi, for Aramco, they can actually tokenize oil and be able to trade, without moving oil around, and, reduce their reliance on OPEC. That will actually change geopolitics as well. And for gold, gold is still very much in a lot of markets in Asia, still very much traded with the physical gold, right? So I think those are the low-hanging fruits. For stocks, probably less so, because most of them are already liquid. If they're not very liquid stock, they're not worthwhile to be tokenized anyway. So I think maybe bond commodities will go first, and especially anything that can be securitized. So I work on the battery project where, every month, using the storage, energy storage function solution, you can actually generate a lot of energy savings. So that in the traditional financial world, you can issue a securitized bond, and against that kind of yield every month. But in this case, you can actually write that into token and completely just tokenize the whole funding for those kind of projects.
No, I love that. I love the idea, even the examples that you gave specifically to oil and some of these, where you even brought in some of the additional factors to consider on like geopolitical risks, like the idea of tangibility of like how this actually works and like the macro impacts that it's having here. It's just something that I feel like it's never really been felt as much, where you really understand the impacts on a broader scale to make it just as tangible as possible. Again, it's not a buzzword. It's actually something that's real, literally, like no pun intended. And so to that point, I really appreciate that. So, as we're thinking about the future, I mean, Sui's been around for about a year now. We're starting to get into the idea of RWA exploring. Maybe in a lot of these builders here, maybe even are considering the idea of how RWAs could impact their journey. When you look at this audience here, what's some general advice that you would give to people?
So, before you get on the stage, I was just joking. I appreciate the marketing team of Sui actually make this less crypto. So people like from Franklin Templeton, etc., will feel comfortable to come here. I think the real opportunity, if you just look at the numbers on the screen, the real opportunity is when you can actually reach out to the real world. I understand we often in the crypto, love our community, but forget about how massive the opportunities outside of the crypto world is. So I think be able to reach out and be institutional ready, and be humble and learn. Although maybe they sometimes we perceive them as old-fashioned and even dinosaur, but there's something to learn, and to be humble and learn from them. What will make sense to them? What kind of solution will make them very comfortable? And then from there, provide solution that actually they feel comfortable to adopt. So trust me, right now, we feel 2.5 trillion is very exciting. We haven't even started yet.
Yeah. I can really appreciate that. I think we saw maybe some similar progressions related to, fintech when it was first starting to come out too, where there was a push away from banks initially, but progressively you started to see some of those collaboration opportunities.
Yeah, I'm not a big fan of disruption. I think disruption often the cost is too high or it does not work, right? Is to co-involve with the real world. Often you see the real adoption happens. So perhaps because I have my 2 feet in the both worlds a little bit, so I can empathize how each side is perceiving other side. But trust me, I think if in this cycle we can actually start to bring along, just look at how powerful the story has already become when institutions start to have a Bitcoin ETF, right? How much that validates our the biggest part of our market already, and if we can bring that more of that along, and it would just make this adoption in the many times a multiple compared to where we are now.
Totally. Now, I know you have a lot of graphs here specifically related to total addressable market, market cap specifically. As the industry, that's because of the patience idea, some of these progressions, like things that we can look for, additional metrics that can really tell us we're on the right path. Is there anything else that kind of sticks out to you, something that might help to continue to keep us committed to this idea of patience and collaboration?
Yeah. So, as probably, as I shared, I got into this quite early, but I believe most of you have no idea who I am. I deliberately, to me, I think, because bulk of my business is dealing with some of the largest families in Japan, China, Hong Kong, some in Middle East, etc. So my reputation is my most prized asset. And the initial journey in the crypto freaked me out a little bit, some of the projects. So in this cycle, the reason, I come out a little bit more again, I think in my entire journey of crypto, I love crypto. I use capital to back some of the projects. But in terms of using my reputation to back, only two. So the first one was Render. Has anybody heard of Render? Yeah. So Render in 2017, Render price was 4 cents. And I was going around telling people how important in the AI economy, when you have a distributed GPU, this is going to be a huge project. And Render was a tiny project. It doesn't really have the team compared to Sui. And with that patience, with that real adoption, and start to make sense. So I think today Render is about $9-10, and the highest is $13. And I'm not here to talk about the price, but just to hit on the point about patience and building. So Sui is the second project I'm backing with my reputation. What I'm seeing here is the similar to 2017 when I saw Render is the fundamental tech and capability that has the potential to be relevant to the real world. And from what we are talking about, real assets for the financial institution is just one of the quite a few threads that we can really make it real. I think the biggest, the most important advice I can give is ignore the price, ignore where the market is, because all of this will become byproduct if we can actually just get on, roll up our sleeves and get on our head and build, right? And build something not because of compare with any other system, build something not because you're competing with the next crypto project or any other Web3, build something that's the real world actually going to use. Either they can tell this is Web3 or not, doesn't matter. It's the vast majority of people start to adopt that and, really bring this solution, even in the topic, in this thread we're talking about in real assets, we can tokenize 1%, 2% of what's on the screen. Price is the last thing you need to worry about.
If Evan was here, I'm sure he would love that even more. When you say why are we here, when we started this whole conference to where we are now, that rally cry in itself just really resonates. Like the idea of why are we here, not focus on the short term, we're focused on the long term. These take patience. This takes commitment. It's not for everyone, but it is a journey. So thanks, Bankless. Then with that, really appreciate the time, guys, and enjoy the rest of the conference. Thank you, Jen.
Thank you so much. Thank you.